in.
This is Broke Money Hustle. And now, here's Broke Money Hustle with Trico and Eric.
Hello, everyone, and welcome to Broke Money Hustle, the struggling blue-collar podcast where two schlubs just kind of try to figure out buying stocks and then investing money and putting our money in assets instead of crooked banks, and kind of stumble our way through that and let you come along for the ride. I want to thank you if you're listening on Spotify, Google Podcast, Apple Podcasts, wherever you get your podcasts, and certainly everyone on the Indie Volt network who's listening in through Indie Volt Radio. We thank you for joining us once again for Broke Money Hustle. I am joined by my co-host, Trike. How's it going, man?
Good. Trying to figure out a good angle with my camera, because no matter what I do, I look bald. I don't know why. It's
Maybe it's because you shaved off all of your hair.
It could be it, I guess. Yeah.
You need some more shadow on top. It'll fill it in.
Get a couple of those spray cans of hair they used to have and just empty them out.
Yeah, there you go. There you go. I don't normally have my big overhead light on, but I do today, so it's a little bit more illuminated in here.
Cool. Looks good.
Anyway, my portfolio is Red Dead Redemption. How about yours?
Yeah, it's kind of, it's about half and half. It's not as good as it's been, but it's, let me full screen it here so I can see. Yeah, it's probably about half and half. I got a couple that I just bought when they were really, really cheap on a dip. That's kind of keeping me from losing money overall. But yeah, a lot more red than green.
Yeah, I'm down about 6% on my 3-month average in Robinhood, and it's about the same in Webull. I have a lot of tech stocks. It's earning weeks for a lot of tech stocks, and so I think there's just a little bit of nervousness beginning the week here, because it seems like there's a lot of selling going on. Nvidia down, Tesla down, Apple down, Nikola's kind of bottomed out around $20. It's been there for a while, but most of the things that I'm holding are down overall. And there's a lot of companies that are going to be bringing out their earnings, and basically what happens, the market changes based on news and political cycles, more on the market. Well, the big news is the earnings, seeing what kinds of revenue companies are coming in. Now, most of the tech companies have been responsible for us to survive during COVID, our new working environments and whatnot. Whether it's Apple, whether it's Amazon, those two definitely are coming out with earnings this week. And so it'll be interesting to see how good they are. And I know there's a lot of people who are coming online to, maybe just a little bit hesitant right now, but they're hoping for big things. And I'm just going to look over this. Got this article up from Barron's by Ben Walsh, talking about Amazon, Apple, and other tech companies reporting earnings this week. Here's his take on what to expect. Investors will get a sense of how some of the biggest tech companies in the world fared during the third quarter, when Amazon, Apple, Facebook, Google's parent company Alphabet, and Microsoft all report earnings this coming week. All 5 tech mega caps have far outpaced the S&P this year. Amazon and Apple's performance year-to-date has been particularly noteworthy, with their shares gaining over 70% and just under 60% respectively. Microsoft hit a record in September, and investors expect more good news Tuesday. Revenue is expected to rise 8% over last year's number, just shy of the record the company set last quarter. The Department of Justice filed an antitrust lawsuit against Alphabet last week after the House Antitrust Subcommittee released a harsh report calling out Google, Facebook as monopolies. On Wednesday, the CEO of Alphabet, Facebook, and Twitter will testify before a Senate committee on legal protections afforded platform companies. Investors have been relatively sanguine in response to growing scrutiny from Washington. For example, Alphabet stock has risen 10% since the subcommittee's report, despite the subsequent DOJ lawsuit. As Barron's Eric Savitz notes, these massive companies will likely emerge from the pandemic stronger and more profitable than ever. So there you have his take. And it is interesting to see that they're getting dragged in front of Congress for being monopolies, which they are, and doesn't seem to be hurting their performance very much.
Yeah. Yeah. Especially, like they're a monopoly. They have all the business. They kind of control all of it. So, they're probably doing really good.
It's interesting though. I think a lot of people, the majority of all the shares, are held by big corporate interests, big hedge funds, what have you. Not little guys like you and me. So the influence there is okay, whatever. Cost of doing business. You get hauled in front of government. You tell them something, you get them to go away, then you go about your business.
Yeah.
And I've read somewhere where one of the chief primary investors in Facebook and its origination was the CIA in the first place. So getting big tech dragged in front of government is like, I don't know, it's like, why'd you get caught? Not what are you doing wrong? It's more like, why'd you get caught?
Yeah, exactly.
Don't get caught again. Because we need that information. But it is, we can probably call these companies monopolies because, Google is a company, but it's turned into a verb for searching for something on the internet. It's these are household names. These are things that everybody uses without thinking about it. And they just kind of have this implicit trust. You want a good comparison, look up the word fascism on Google, and then compare it to the dictionary definition from a paper dictionary predating 2008. Big difference. So if tech controls our information, controls our history, controls our knowledge, there's a lot of danger here. And it's the way they do it in China with their social credit scoring. And, you don't dare say anything bad against the CCP. Your social credit score goes down, and then you can't get work. People don't want to be around you. And you basically, that's the way for them to end your life. And we'd be stupid to think that there's not elements in our own democracy that want things to be that way here. So I don't expect much out of these hearings. It would be nice to see them broken up, at least to be not considered platform, but publishers. So they don't have these protections baked into their agreements, so that we can sue them for taking down our page, about lizard fan groups or whatever we know who they're really taking down. It's opposition voices, and that's not something we want if we're going to have freedom of speech. So hopefully, that's what I would like to see.
Oh, exactly. And it's funny with the social credit score over there. When I first hear about it, I'm like, oh man, that's so wrong, what society would do that? And then you go on Twitter and it's not really that different over here.
No, that's what, cancel culture is. It's like the baby for the social credit score system is cancel culture. Come out with an unpopular opinion, you get a whole bunch of these uneducated blue check marks screaming down your throat and all of their bot gangs or whatever, and you pretty much just got to leave the platform. I've been experimenting with some of the other social platforms out there. Parler, Gab, Rumble is a new competition for YouTube, and so there's definitely competition out there, but they have nowhere near the presence or the fiscal muscle to really make a huge dent. But it's good that we still have some level of competition, but not nearly enough to where Google can say that it has real competition.
Yeah, it's true. Because I know I forget the name of it. There's a few of them where they don't track your information. When you look stuff up, it doesn't track it. It doesn't, sell it to companies or anything.
DuckDuckGo is one. Good search engine. I use the Brave browser, which is built on crypto technology, and so it doesn't. You can actually earn crypto rewards, put in your digital crypto wallet from searching and stuff through their browser, and it's supposed to be a secure, secure by the blockchain, basically.
Cool.
So there's anonymity there. But really, you shouldn't do anything online that you don't want getting out, because there's really, at some level, there's no real security there.
Yeah. That's why I only watch cat and puppy videos when I'm online.
Yeah, that's right. But so we kind of got a little bit off track. But the main story is there's a lot of big money showing their earnings this week, and so I would look for, right now a lot of these stocks are down. Good time to buy, because we know it's a safe bet they're going to report record earnings, because we've all been at home using tech for the last 6-7 months to flatten the curve. So, that being said, Apple just came out with their new fancy shiny iPhone, so that's another reason to suggest, their fourth quarter is probably going to be pretty good. And there's another article from Barron saying that Thursday is when Apple reports. Analysts are getting jazzed. So there's a lot of people that are just expecting these tech companies to kind of blow up their portfolios, and so we'll look for that, and hopefully, that'll happen. I looked at Ford today. Ford is up over $8 right now.
Nice.
Kind of been doing just a slow, steady growth. So I'm glad to see those Ford stocks performing pretty well. Tech and EV, electric vehicles, definitely keep coming into their own. There's GM and Ford are working on some new things, so there's a lot to be excited about. Big news of the day, though, Dunkin' Donuts, my favorite place to get a donut and a cup of coffee.
Yeah.
I can't stand Starbucks. I worked for them. They just, nah. But Dunkin' Brands looks like the parent company of Arby's, which is called Inspire Brands, wants to purchase them. Are looking to acquire them, so to speak. And looking into this article here from the Wall Street Journal, the parent of Dunkin' and Baskin-Robbins said it held early talks to go private in an acquisition by Inspire Brands, whose portfolio includes Arby's, Buffalo Wild Wings, and Jimmy John chains. The acquisition offer comes as the coffee, donut, and ice cream chain has wrestled with lower sales due to COVID-19. The company, whose market value is $7.3 billion, based on Friday's closing price, in late July said it would close around 800 U.S. locations that have had low sales volumes or were mostly unprofitable before the pandemic. Dunkin' Brands Group on Sunday said there was no certainty in any agreement will be reached, and it wouldn't comment any further unless the two companies reached an agreement or terminate discussions. This was first reported on Sunday. And Dunkin' Brands shares rose 15% on midday trading, closing at 102.13. The Canton, Massachusetts-based company has more than 21,000 points of distribution in more than 60 countries. The company went public in 2011 after it was acquired by Bain Capital Partners, Carlyle Group, and Thomas H. Lee Partners, LP in 2006. Company dropped the word donuts from its flagship brand due to its increased focus on beverages, which represents much of its sales. Maybe that's why they started to stop losing earnings, It's got to be about the donuts. Remember those old commercials? It's time to make the donut.
Yeah.
I already made the donuts.
Yeah, it's funny. The other morning, it was real. It was early in the morning. I was waking my daughter up for school, and I'm like, "It's time to make the donuts," and she's like, "What are you talking about? Like, we're not making donuts."
Stores are run by franchisees. It's a common model across Inspire and Rourke investments. Atlanta-based Rourke's broader food and restaurant portfolio includes Auntie Anne's Pretzels, Moe's Southwest Grill, and Jamba Juice Shops. Other restaurant chains that have sold during the pandemic were in distress. Casual dining brands, Crystal, Logan's Roadhouse. I shall miss the Bar Louie. Hated that place. And the U.S. division of Japan, I don't even know. Kotiden were sold after filing for bankruptcy. Pandemic also hurt business for Dunkin', where the U.S. same-store sales fell 18.7%, 6% at Baskin Robbins during the second quarter compared to last year. Company has said since business has improved. Dunkin would be Inspire's fourth restaurant acquisition since 2018, when it was formed through a merger of Arby's and Buffalo Wild Wings.
Nice.
Inspire bought burger chain Sonic, which I'm a fan of, for $2.3 billion, including debt, in late 2018, and Jimmy John's last year. So this, if you own Dunkin' brand stock, I know this is a stock I was watching. This goes through, they become private label again. They'll be under this. I guess that means they'll be delisted, and they'll be part of Inspire Brands. And so at least that's what this sounds like. And you know what, though? It's a company I love, so whatever keeps it open, I'm all for it. Because they have the best donuts, and they have much better coffee than Starbucks. Yeah. Like the original roast compared to like a house roast at Starbucks, so much better.
Oh, exactly. And I don't think Dunkin' Donuts are going to go anywhere, Like,
there's not enough of them here in Michigan. There's like one or two, three at the most that are close to me, but they're still like 20-minute drives.
Yeah.
I live in an area with 3 Starbucks. Come on, man.
Yeah.
At least a Tim Hortons, but good grief, I would love a Dunkin's. I'd probably gain back all my weight though that I lost.
Yeah, I always wonder, is it because we're near the border? There's so many Tim Hortons in this area?
Because Tim Hortons is Canadian, yeah.
Yeah.
And Starbucks is the Borg, so they're just everywhere.
Yeah.
It's the Disney of coffee.
Yeah. Yeah, exactly.
You're just all consuming.
Yeah. Yeah. And it's more, it seems almost like more of a lifestyle brand. Like people just want to have that name on that cup of coffee. You know what I mean? Like it's.
Yeah, it is.
Yeah.
It's like NPR,
Yeah.
You feel like you're important because you're drinking Starbucks. Ooh, da-dee-da.
Exactly.
Your $5 burnt coffee, sir.
Yeah. Yeah, if you have to put that much like cinnamon and syrup and all that kind of stuff to make it drinkable.
Once anything other than coffee hits the cup, it's not coffee. You're just making it into candy.
Yeah, exactly.
I was raised a man. I drink my coffee black as night. I like a dark roast. And when something that punches me in the gut, and I'll tell you this, get it over here. Yeah, this stuff right here. Black Rifle Coffee.
Oh, nice.
We don't have any sponsors, but this stuff is the bomb if you like coffee. This stuff is really, really good. Made by veterans, and so the money goes to a good company, and it's a really good product.
Mm-hmm. And if they want to sponsor us, we're always open to sponsors.
Oh, absolutely. Yeah. We are totally for sale.
We'll sell out to anybody.
Yeah. Speaking of sellouts, gosh, AMC down 9% again. Cinmark is down. And I had just recently bought them, so I'm losing money on that.
Oh, man.
We're continued the national decline here. Shares of AMC declined 9% to $2.71. Cinmark, which I bought at $12, is at $8.43, broadly lower than rising coronavirus concerns or cases. Meanwhile, theater advertising company National Sin Media was down 9% at $2.05. Attendance has been low at U.S. movie theaters as they reopen. Many prominent films have been delayed or switched to home viewing options. According to media reports, The Honest Thief led the weekend's North American box office worth $2.4 million. I haven't even heard of that movie till I just read this.
Yeah. I was looking at movies because there's a local drive-in. Because I keep forgetting the theaters are open now. But they had it at a local drive-in, and I'm like, is this an old movie I never heard of, or what? Like,
I know AMC is starting this new thing where they're renting out the whole theater.
Yeah.
So the parents can bring their kids and then, have a day out. So hopefully that works out for them. I guess I'm just going to hold on to this stock because if I sold it now, I would lose a ton of money on it, and just hope that a brand like AMC, for example, is just too good to let go away, and
Yeah.
something happens to it. So we'll just ride that out.
I
But
still think they'll bounce back. It'll just be, I mean, longer than what we thought.
yeah, we've got so much uncertainty right now, especially like my industry, the Comic Cons and all that. That's I've got most of my schedule next year booked because of the cancellations of this year. But I'm starting to hear that that some of the cons are like adding extra dates just in case their early dates don't get to go, and it's like we're in this death grip with this silly COVID nonsense.
Yeah.
There's the we here in Michigan, we just had this Michigan Supreme Court rule against our governor, and then double down on it and say, no, you do not have an extra 21 days. Your unconstitutional orders are null and void as of now. But stores and just about everywhere are still enforcing it as if it's state law. We're just kind of stuck in this ridiculous scenario.
Yeah.
So who knows what's going to happen? I certainly don't want to be doing a Comic-Con where everybody has to stay 10 feet apart or whatever. And, they mandate, you must have a piece of plexiglass in front of your booth and a little slot in there to slide stuff out if people want to buy it. Everything's going to be pre-bagged. That kind of nonsense will just kill us off.
Yeah.
Financially. We'll just all close up shop and go away at that point because it's ridiculous. There's just no point to it. And attendance won't be enough to where it even pays the people putting it on.
Exactly. Yeah, it's a concern I've had lately. Is, especially some of the comic conventions, they didn't have one last year. If they don't get one next year, I'm pretty sure a lot of them are going to close up. You know? And, I mean, usually there's another one that'll come and take its place, but, there'll be a lot of really good conventions that I like going to that, might not come back, I think.
Yeah, I would imagine. And I imagine there's going to be a lot of people that I remember from past shows that aren't going to be back either because they've moved on and gotten different jobs or, because we just have to survive this. I was out doing DoorDash not too long ago, so I've still got that as a fallback. I still got a little bit of work coming in for comic art and all that, so I'll keep that up as long as possible. And I've still got 2 shows scheduled in December. I think whether or not those go through are going to just largely rest on November 4th.
Yeah, exactly.
But hopefully we'll survive through that and come out better on the other side. Anyway, those are the main news stories I've got. Now, did you do any trading so far this week?
Yeah, I did a little bit. Nothing really exciting. I got rid of some stuff. They were even some of the stuff I got rid of was even dividend stocks, but I'm kind of getting even more of a snob now of dividend stocks, where I'm like, well, this doesn't pay enough in dividends. So, yeah. One of them was TCBK. This is kind of like my date. It's Trico Band Shares.
Oh my gosh, with that name, you have to own it, right?
Yeah. It came up in as a suggestion or something on Robinhood. So I'm like, oh man, it's got my name in it. I gotta get this, So I was watching it, to get it at a good price. Ended up buying it. Yep, here we go. Oh, it's actually down. I should buy more. I ended up buying it at $30.82 and held on for a little while. Then the dividend came out, and the dividend was really small. I'm like, well, I'm tying up $30 on this dividend, and I could cash it out when it makes a little bit. I could cash it out, buy a different dividend stock that would pay something better. So it did pay me a dividend on September 25th for about 22 cents. And I was like, well, I got some other monthly dividends I could buy for $30 and get 22 cents every month. So
Nice.
Yeah. So I sold this one, sold it for $31.10. So You know me, if I make 6 cents on it, I'm like, I'm a day trader.
Woo,
Yeah.
yeah.
So I made 18 cents on, or no, 28 cents on this one. Sold it, took the money, went and bought some more stuff. One of the things I bought today was, this is going to be my Mary for this week, is FRT.
So fart.
Yeah, basically. So this is like a REIT, like a real estate investment trust.
Okay.
It's a dividend king, so it's been earning dividends forever, and it's pretty reliable as far as the dividends go. It's got a pretty good dividend yield. Robinhood's showing 5.49 on the yield. Today, when I first logged in, it was around, I think, 76, and I had $75 in my account. So I'm like, well, I'm gonna put a limit order for 74. I'll see if it dips down there. I'll just check it here and there. See if it's getting close or not. So I picked it up at 74, and then, of course, since I bought it for 74, it dipped down to around, lowest I think today was 73 even. So, or actually a little bit less than 73. So, of course, after I bought it, it dipped down even more.
Sure.
But at least I picked it up. It was one more thing I could check off on my Dividend King bingo card. So I'm happy about that. This will be a long-term hold. It's it'll be interesting to see what the real estate market does. Because I think in a few months, real estate in California is going to be real cheap.
Yeah, you know what? It's gosh, it seems like that state just keeps doubling down on stupid.
Yeah.
And that's the way the rest of the country is supposed to go in the future. No, thank you.
Yeah, I was I've been watching some of the videos about California and stuff, and I'm like, this has got to be clickbait, or they're embellishing this stuff or something. And I'm like, well, there can't be 20 different YouTubers and all these different articles embellishing that much, or you know what I mean? Like,
Yeah.
yeah. So, even people that are pro the things happening, and they still don't think it's being ran correctly. So I'm like, both sides are saying it's bad. So yeah, I pretty much spent up my allowance this week for buying the FRT. I had $1.40 left over, so I'm like, I'll Realty Income, ticker symbol O. It was under $60, and
Still under 60 right now too.
yeah. Anytime that's under $60, I just grab some, whatever I have in my Robinhood. I just grab some up. So I spent like $1.40, got some of that. I love that stock. It pays dividends every month. It's a dividend king, so I know it's not gonna go anywhere or anything like that. So that's kind of my 2 Marys and a date for this week. Let me see. Let me go and find what my kill was, because I killed off a couple things.
Dun.
Yeah. Did that one sell? Oh no, I think that's all I have for this week. If I look at last week, I think I sold some stuff. Oh, NYMT, New York Mortgage Trust. This was another one. It was just a suggestion by Robinhood.
It's a cheap mortgage trust.
Yeah, I saw it. I'm like, oh hell, $2. I'll buy a couple of those. So I bought back in September. I bought 2 shares, and in October I bought another 7 shares. And I think it even gave me a dividend not too long ago. Yeah, I got like a 53-cent dividend, but I was like, I just kind of bought it because it was a suggestion, and it sounded pretty good, and it was crazy cheap, so I bought a couple shares, and then I doubled down on it. It paid out the dividend, but 53 cents is all right, but I'm like, well, I owned like 9 shares altogether of it, and in 3 months I only got 53 cents for 9 shares. So I was like, yeah, I'll take some of that money and buy something else that, kind of pays more dividends, or a monthly dividend, something like that, where I can kind of make more money. Because ideally, I want to just live off them dividends. So I just kind of been working on that lately.
That's the goal.
Yeah.
Now, speaking of dividends, I do have some news for you you may not be aware of.
Sweet.
There were Whirlpool, Crown Castle International, American Electric Power, and Avery Dennison were among U.S. companies that announced dividend increases this week.
Ooh, I like the sound of that.
Whirlpool, ticker symbol WHR. They've been around for a long time. I would probably say they're a dividend king, if not an aristocrat. They may be an aristocrat, but they've been along a long time, so I'm sure they're probably a king. They just recently declared a quarterly disbursement of $1.25 a share, up 5 cents from $1.20.
Nice.
So 4% increase there. American Electric Power, AEP.
Cool. I love
Okay,
utility
American
companies.
Yep. 70 payout of 74 cents a share from 70 cents. So 3.2% there. Avery Dennison, which is AVY. Their portfolio package includes materials. Declared a quarterly dividend of 62 cents a share, nearly a 7% increase from 58 cents. And let's see, the stock, which has returned about 9% this year, yields 1.8%. Also, Crown Castle International, CCI. They own and operate and lease communications infrastructure like cell towers.
Oh, okay.
They
I thought
plan to
maybe they
raise-
made Crown Royal. I was like, yeah. They're probably doing good during the pandemic.
Yeah, I imagine so. So let's see. Cell towers, they plan to raise the quarterly dividend to $1.33 from $1.20, so an 11% increase.
Nice.
That's definitely somebody to watch, especially when we got 5G installations about to begin throughout the country, or already beginning. Various other companies said this week they will keep their dividends at current levels, and that includes, they list a whole bunch of others. But so there you go. There's 3 that have just increased their dividends. So if they're not already in your portfolio, it might be something to think about.
Yeah. Yeah, I'm adding him to the to my little watch list here. Cool. Cool. Sounds good. How about you? Any merry date kills or anything this week?
No, I've had to keep things pretty quiet just due to our current financial situation. I am looking to add some more silver to what I already have, and possibly put some more in my Glint gold account. Haven't really been in a stock buying. I hate to say the word mood, because these things really shouldn't be based on mood, but just thinking more about other asset classes here recently and trying to add more to them, not necessarily just the stock portfolio.
Yeah.
That does include crypto as well, and Bitcoin broke its $13,000 wall, so it might have some room to run. I think a lot of things are going to depend on what the Fed does. There's still push and pull. You got old crazy Nancy there, not agreeing to anything, just so that you can keep stringing things along.
Yeah.
And there's still people hurting that need this stimulus thing coming through, and we kind of get jerked around, and the elections are up in the air. So there's a lot of uncertainty. When uncertainty is there, I look to precious metals. So and a lot of people seem to think that crypto is here to stay, and that can be considered an asset class like digital gold, for example. So if you look down the description on the YouTube video, you will find links if you'd like to get into trading stocks, Robinhood, I believe there's a link for Acorns to join that, which you just get some nice Vanguard ETFs, which have done really well for me.
Oh yeah.
Just sold a little bit of that to do some stuff for Christmas, but other than that, it's always rebounded really well. So we're just going to keep that money there. And Glint, you can also sign up there and buy fractional gold, which you can then spend like a debit card. And still precious metals. We had that story a few weeks back that are being artificially kept low thanks to JP Morgan and some of their spoofing. So it's not a bad time to be buying silver and gold. I know silver is probably about $27 an ounce right now, I think. So yeah, definitely things to add to your portfolio.
Yeah. Yeah, pretty soon this week we need to head over there and buy some gold or buy some silver.
Yeah, and you need to come down and check out my shop too here on Mac.
Yeah.
I keep telling you about that. They were
Yeah.
$5 over spot. That was their premium, and that's pretty good.
Yeah, that's not bad at all.
All right. Well, thank you everyone. This has been Broke Money Hustle. We do appreciate those of you who are listening to us. Apologize for not being regular broadcasts. We've missed a couple of weeks. Life happens. That's just kind of the way things go. We're just doing this for fun and trying to help educate other people along the way. So, kind of playing it loosey-goosey like that. We're not always the cutting edge. But, that's the common man. That's the people that we want to reach. It's like you don't have all day to think about these things. You want to try to do the best you can so that your money at least stays safe, if not grows. That's why I'm a big proponent of something like Acorns. You basically set it and forget it, and let it grow in the background. And they've got lots of different products too. Something to set up for your kids or grandkids so that they can take an inheritance of it at 18. There's a Roth IRA there, and you can also get a debit card and use it as a checking account if you want. So. Lots of opportunities there and low costs.
Yeah.
Think about the
really
bank fees you pay over time with Acorns to get all of the same features. You're paying $5 a month.
And you'll probably make that back in interest.
Oh, easily. I like my Acorns account has consistently been about 15%. It's been as high as 18, it's been as low as 12, averaging out about 15% consistently through this pandemic. So. Can't beat that.
Yeah.
All right, everyone. Thank you again for joining us. This has been Broke Money Hustle.
This is Broke Money Hustle.